Hi, welcome to another episode of Vantage Point by DJ Janice. And I am really excited as always, but today the excitement is a little bit more because we are live from a studio and I am being joined by Christian Osvald. He is head of business transformation for Asia in Julius Baer, has spent a lifetime in private banking, and we are really excited to have him here and get his insights on the future of finance and especially the future of private banking. Welcome, Christian.
Thank you very much, Laksh. Pleasure to be here with you. My name is, as mentioned, Christian Osvald. I'm looking after business transformation for Julius Baer in Asia, meaning I represent the business side of change and innovation for the region.
Absolutely, that is fantastic. That gives me a lot of things that I want to ask you about. I don't know if you have seen the show, but our show is all about asking the difficult questions first. So let me just get started. Wherever we go, what we see is hybrid wealth management, role of digital platforms, and the role of RMs is changing. So I have a few questions for you. Let's start with the difficult questions first. Do you think RMs are getting disrupted? And do you feel their role will change in the future of private banking? And how do you see their role changing?
I think first and foremost, private banking is a very personal, it's a people business. It's built on personal relationships. And also at Julius Baer, we pride ourselves actually of bonding with our clients and forming these personal relationships. However, when you look at the hybrid advice with digital on one side and personal interactions on the other side, obviously in the last couple of years, the pendulum is shifting towards more digital, and it will continue to do so.
So how do you see the RM's role changing in this environment?
The RM will continue to play an important role in the relationship between the client and the bank, because ultimately it's a trust-based, it's an advice-based business. So personal advice is something that's at the center of how the client will interact with the bank. However, the RM also needs to start embracing digital opportunities that present themselves to be able to, where clients can self-serve and also consume advice digitally, but also be able to interact with the bank more digitally through digital touch points. So in that sense, the RM should see the value of these digital touch points and start embracing them, hence because it will provide substantial benefits for the RM and their daily lives.
So that is an amazing answer, Christian. I think it is very balanced that the future has both RM and digital platform, and it is not one against the other. So what do you think private banks can do to enable RMs to embrace a digital future?
I think there are a few things that banks have to get right. So the first is, it starts with the client. So the client has to be able to interact with the bank through their channel of choice, being it chat or digital channels, but also the more traditional channels such as phone or emails. But on the RM side, it's very important for the banks to make the RMs the ambassadors of that change. The RMs have to buy in to those digital touch points that the bank is offering, because there are substantial benefits, both in terms of efficiency, but also in risk, that the RM and the bank can experience when they offer more digital touch points to clients and get them done right.
Oh, absolutely. And don't mind me being a skeptic, because I work with a lot of your peers. And what happens is, some of them tell me that the direct-to-customer platforms are not seeing the ROI or similar amount of transactions as what comes through an RM. So what do you think is happening there?
I think the first reason is many of these platforms are built for clients, but not with clients. So that the co-creation with clients to make sure that these platforms are built in an easy and intuitive and fast manner is something that's of critical importance. Second, I mentioned you have to answer the question, what's in for me, for the RMs. You have to make the RMs ambassadors of the change, otherwise the adoption will be quite difficult to achieve from the client side. And lastly, it's the new channels, the new touch points that the banks are introducing have to be substantially better than the existing touch points. It is not sufficient to just make incremental changes for a new channel in terms of benefits, because an adoption will be challenging to achieve. You need to make the new channel substantially better than what is currently in place.
Oh, absolutely. And I think you raised some really, really good points about customer journey being customer-centric and the new platforms being much, much better than what is existing today. And then that is when we start seeing, a better return on investment. no conversation around private banking is complete without talking about the massive wealth transfer of $70 trillion, if I'm right, which is the generational wealth transfer that is happening. So some thoughts around, how are you guys planning to make sure that you have customers for a multi-generational relationship rather than just one or two generations? So some thoughts around that.
So when it comes to next gen, first you need to understand that the client expectations and the value of the next gen is changing. Next generation clients are very much interested in sustainability, they care about the environment, and they want to make sure that the companies they associate with align with the same purpose, or have the same purpose that that they themselves have. From a behavior perspective, next-gen clients are a lot more digitally savvy. They embrace new technologies, but they also embrace a sense of community. They like to share ideas and get ideas from like-minded peers. Now, when it comes to banking, next-generation clients, they do value transparency and very personalized advice.
Right.
Hence, it's also important for banks to make sure that the research and the advice that the banks give to clients is very clear to understand what the bank is proposing and advising.
Oh, that is amazing. Could you share a couple of examples of how Julius Baer and you are, doing some initiatives around the next gen?
Yes, maybe two examples. So first, not to forget, next generation is not just about clients, it's also about the workforce.
Yes.
We also have to cater for next generation RMs, next generation middle and back office colleagues. So one initiative that we have done is in Switzerland is the Be Baer Challenge to attract the next generation of tech talent. So it's on the online gaming platform Roblox. There is the Be Baer Challenge, and if you engage in a challenge, and at the end of it, you are able to apply for a role at Julius Baer in the tech team. So that's quite an exciting way to, of course, to attract the next generation workforce. When it comes to our clients, we do have in Asia a young partner program, and there we have a collaboration with our new innovation lab Launchpad, whereby the attendees of this Young Partners program, they have the ability to propose a new product or service that Julius Baer should offer that is geared towards their needs. And the winning team of this hackathon has the ability to actually work with our colleagues in Launchpad on a design sprint to provide a design prototype on that new product or service that they have proposed.
So let me know if I am getting this right. So you have an internal hackathon. If you win, then they can come and partner with the design team, and then you go forward and bring it to the business. Is that what you're talking about here?
They partner with you bring it to the business. It will depend on the success of the platform, of the new product, and how it's being received by the business. But they do have the ability to partner with our innovation lab Launchpad to actually make this new proposition much more tangible. Yes.
So the innovation Launchpad, you've given me like a really big box that I need to get into and ask you more questions. So, but before we go there, as you said, next gen is not only about clients, it is also about business. So how do you structure your business for next generation? How do you transform your business from an organizational perspective to cater to the next generation of customers, current generation of customers, etc.? How do you do that then?
I think it's important to understand that what brought you here will not get you there. As a bank, you have to understand the client expectations are shifting. Second, as a bank, you need to understand what are the opportunities that this digital age, this digital world provides them with. The new technologies that are coming up, the new business models, fintechs and so on. You need to be able to understand which of these drivers, which of these transformative drivers are the ones that could be of benefit for you and your clients. And thirdly, as a bank, you need to make transformation a strategic priority. You need to answer the question, what type of bank do you want to be in that digital age? Then you need to focus your investments and your initiative around those areas that you want to transform, and then make sure that your organization, but also your incentive structures are geared towards achieving those objectives. And they should be focused on creating impact. So for example, it's not sufficient to just say that you want to offer online trading to your clients. It's about, we want to have X% of our trades be done online by clients by the end of that date. And then set your project team, your platform teams, your initiatives up to achieve that, those targets. And please don't forget, this is not just a front-end play. It's not sufficient to just focus on transforming touch points to our client. It's very much also a back-end play. You need to, don't forget to invest in your core banking infrastructure, in your back-end infrastructure to make sure it's fast, it's efficient, it's nimble, and it supports the front end to the type of client interactions that you want to offer.
No, absolutely. That is an amazing answer, because the clear takeaways for me is define what type of bank you want to be, and within that definition, enable that definition of what type of bank you want to be, not only from a front-end perspective, but also a middle office and a back office, and have all of those transformations in place. That is one of the most amazing answers I have heard, and we have shot like a couple of seasons already, so that is an amazing answer. Now, let me put you on the tricky spot again, because there are a few trends we want to get your thoughts on, which have been a big trend in the private banking space. So, are you ready for some more tricky questions? Okay, absolutely. So, with the next gen customers coming in, there has been a lot of interest in digital assets, and we have seen digital assets being really volatile. As you've seen Bitcoin go up and down, etc. Now, how do you see digital assets as a part of private banking and what you do?
At Julius Baer, we just presented our updated 3-year strategy around 3 pillars: focus, scale, and innovate. Within the innovate pillar, one of our statements is we want to continue to offer the benefits of digital assets towards our clients. At Julius Baer, if you know our history in digital assets, we first partnered with a digital bank, SEBA, in Switzerland to provide the benefits of digital assets in some forms to our clients. And also the ability for clients to see their digital and their traditional assets in the same statement.
Oh, wow. Yeah. I'm just surprised, because that is such a difficult thing to do, combining statements or performance of digital assets with traditional assets, if I might call them that, in one place. And there are a lot of financial institutions that still don't do that. That is an amazing achievement. So please continue.
Yes. The second step we have done is to provide research on insights on digital assets. If our clients talk to us about digital assets, we want the bank and the RMs to have an opinion on digital assets. That's why we have provided the research and the insights on digital assets. But now, what is coming next is to be seen. We only just presented our next 3-year strategy. So how fast and how far we go, I can't discuss in too much detail yet. But what I can mention is that, again, it's not just about the clients. It's also about our workforce. We want our staff, our employees, to be literate on digital assets. 2 examples I can share. The first example is our innovation lab Launchpad. We have started our own NFT collection, and every visitor to Launchpad gets their own NFT as well, internal visitor. So it's an opportunity for our colleagues and our senior staff to be exposed to NFTs, and quite a few of them received their first NFT through Launchpad. The second example is an internal blockchain platform that we have built on the Hyperledger blockchain to provide employee rewards. So if I think Laksh is doing a great job, and I can give you a token of appreciation, which is a digital token enabled on the blockchain. So we have built this deliberately in-house with a community of colleagues who are enthusiastic about blockchain. So the community, they can learn and build this platform on their own. So we try to minimize the exposure to vendors in this build, because as mentioned, we want our internal colleagues to be exposed and to learn the new technologies such as blockchain.
Christian, that was an amazing answer. You gave me more than I had asked for. And thank you for clarifying that the NFTs are only for internal visitors, because I visited you in the lab and I did not get my NFT. But thank you for clarifying about that. Now, from your answer, what I see is there is a trend of you innovating differently, and we'll go in more depth of the innovation lab. So I want to ask you a couple of questions here. One, do you think banks, financial institutions need to look at innovation differently? And how are you doing it differently than it was done in the past?
It's a great opportunity at the moment for change makers and banks to want to evolve the way financial services work in this digital age with all these opportunities of the new technologies. There's also the possibility for changes in the power shift, because I do think in the next 5 or 10 years there are the opportunities for certain banks or for certain players to gain market share and for others to lose market share, depending on their reaction and how well they embrace the new technologies and understand the evolving client needs in this new digital age of wealth management.
No, absolutely. And while you are here, we have talked about hybrid wealth, digital assets, etc. One thing when I'm having conversations with some of your peers is ramping up advisory. And that has been, I've been hearing it for a while, but in the last few months or years, it has really caught up speed. So what is the reason behind everybody going after, ramping up advisory business, and what are you guys doing in this?
When markets are benign and they go up, clients of course do look at their wealth management for guidance, but especially when markets are down, you really want to have somebody to give you the insights, who tries to give you clarity and understanding of what the future may hold and how this will impact your personal financial situation. In that sense, advice does remain, of course, at the core of Julius Baer. As a bank, we have invested and continue to invest in solutions that help our RMs and our clients to provide advice, personalized advice, also in a more digital fashion. In Asia, we have rolled out DIAS, our digital investment advisory solution platform that does exactly provide the ability to educate RMs and clients on more personalized advice in a digital fashion.
No, absolutely. And I think some key takeaways from that is advice is the core of what you and Julius Baer do, and clients need advice, especially when things are not going right. And we talked a lot about DIAS when Sasha and Pathik were here, and and thank you for them for making this introduction as well. Would love to get your thoughts on how the client lifecycle management is changing as we have digital platforms, we have RMs, and we have customers with different expectations. So would love to get your thoughts on how client lifecycle management is changing.
The changes are also driven by the client's expectation, because you need to understand there are a number of activities which are actually more engaging and faster and more intuitive for clients to do online by themselves rather than going via the traditional way, via the relationship manager. At Julius Baer, the focus of our activities was on the high frequency, low value touch points to try to automate them, such as this could be low value equity trades and topics like those, right? However, being a private bank, there are of course a number of client needs which are much more complex and much more value adding. For those more complex and higher value client needs, we do make sure that the RM and the entire team at Julius Baer is available to the client to address their needs.
Christian, that is a great answer, puts a lot of things in perspective. Now, one question that has been asked a lot of number of times is, a lot of industries now are leveraging the power of communities, and private banking seems to be going in the same direction. We just saw UBS do Circle One. So what are you and Julius Baer doing in this direction?
The purpose of Julius Baer is to create value beyond wealth. Communities is one of the areas we want to focus on to live up to that purpose. Also, next generation of clients, we mentioned it before briefly, is also more engaged in communities, and they do want to be part of a community of like-minded individuals, of like-minded peers. Hence, also at Julius Baer in our Innovation Lab Launchpad, at the moment we have an innovation use case ongoing on it's called the JB Investor Club. So it's for a select group of our clients who are investors, and we bring them together in a community where we share personalized research with them. We share trade ideas with them. So clients like you are trading X, but we also have polls in there. So we ask questions. For example, how long do you think the crypto winter will last? So, and this gives the clients the ability to interact on the platform and to get insights from one another through their interactions that they have on the app.
That was an amazing answer. So you are building a sort of social network for investors. That is absolutely amazing. Now, one question that I asked in the banking circle, and you never get a good answer. So I'm going to put you on this spot because you are here. Do you think there is the concept of brand loyalty when it comes to a banking and a customer relationship anymore?
Absolutely. Private banking is at the heart a people business. It's based on personal interactions. At Julius Baer, for the past 131 years, we have been helping our clients to grow, preserve, and pass on their wealth. That's at the heart of what we do. However, you do need to understand that the times are changing. The client expectations are changing. There are new opportunities out there when it comes to new technologies, new business models, and so on. Hence, as a bank, it's not a time to be complacent. You do need to continue to focus on that client relationship. You need to be close to your clients and to change and evolve your business model, your solutions towards the evolving needs of the clients.
Thank you, Christian. That was an amazing answer. And now I know you have spearheaded the Innovation Lab or the Innovation Launchpad efforts for Julius Baer in Asia. So let's get into that. I'm really curious about that. So the first question on that is, what outcomes are you and Julius Baer looking to get out of this Innovation Launchpad in Singapore?
We have set up Launchpad last year in Singapore. And we have three main objectives. And the first objective is a radar function to understand what are the opportunities that the disruptions in the financial markets present. How can we leverage the opportunities for us as a bank and for our clients? The second objective is on education. So we do want to educate our staff on innovation topics. We want them to be literate in new technologies and how the financial world is changing. And thirdly, it's about incubation. It's actually building prototypes, POCs, use cases to test hypotheses that we have of how new business models, new technologies could add value to our clients and the bank.
Absolutely. So one very interesting part about the Innovation Launchpad is that Julius Baer is like a Swiss bank. So what drove the decision to have an innovation lab in Singapore?
A few reasons. I mean, firstly, the pace of innovation and transformation of the financial industry is fast in Asia, faster than other parts of the world. Second, it's a very vibrant ecosystem of fintechs. It's a supportive regulatory environment, but also our clients and the workforce. They tend to be a bit younger, a bit more digitally savvy, and more receptive to new ways of banking, right? And thirdly, it's the access to talent. You do have the talent pool in Singapore to tap into when it comes to innovation. But Laksh, please don't forget, Launchpad is not just for Singapore. We do work very closely with our colleagues globally, and if you see any use case that provides value, that could be interest for the bank or for our clients, we will scale it very quickly throughout the organization.
Oh, absolutely. Now, I am a little bit of skeptic, and when it comes to innovation labs, but you have proven me wrong, again and again. So, one thing that I want to understand from your side is, how are you doing the innovation lab differently? I know because you've shared with me previously, but I want you to share with the audience that how are you running this innovation launchpad differently than some of the other innovation labs? And then we deep dive into how do you choose a POC or how do you run a POC that goes forward. So please.
Yeah. There are a few guiding principles under which we run Launchpad. The first one is if we have a use case that we want to work on in Launchpad, we do want to have a business sponsor heading it, and we do want to assign someone from the team to work with the innovation lab team to build the use case. We want to avoid the not invented here syndrome with innovation labs that work as an ivory tower outside of the organization, and then once something has been built successfully, they try to bring it back to the organization and they do not receive the warm welcome that they wish they had. The second principle they work towards is OKR, so objectives and key results. We do want to be measurable on the impact, on the success that we have. So for example, one of the use cases we have been working on is a machine learning algorithm to propose the next best trade idea. Again, clients like you are trading X, why don't you try to trade X as well? After a certain period of time, we want to be measurable on the success of this platform. So if we see that our RMs, they don't look at those ideas, they don't share the ideas with their clients, and the clients don't trade those ideas, then we know it's probably not a good idea and it will not work. Hence, we set ourselves a time frame and OKRs for each of the experiments of the innovation use cases that we run, and we want to be measurable on the success of those. And lastly, the next principle is a sense of urgency. We do want to time box the time we spend on innovation use cases, assemble a strong team with combined of interns and externs to work on them to prove the hypothesis or the value of a use case as fast as we can. So fail fast, learn fast.
Thank you, Christian. That was a great answer. Now, one thing that I want to ask you is, a lot of times we see innovation labs just being there and talking about ideas, etc. How are you, looking at making an impact?
We have a very clear objective with Launchpad to have a tangible and visible impact with the innovation use cases that we drive. Yep. We do want to see an improvement in revenues for the bank. We want to see an improvement of efficiencies, and most importantly, of course, for client experience and RM experience.
Okay, and this then ties back to the OKR part that you mentioned, that we want to look at the OKR. Oh yeah, so that is amazing. So not only are you looking to innovate, but you are looking to innovate with an impact and measure the impact and things that are working, scale them globally or regionally, wherever those are applicable. And that is amazing. That is one of the best implementations or best setups of innovation lab that I've heard in the recent times. So thank you for sharing that with us. Now we are coming to the end of our show, and one thing that we absolutely ask every guest to do is share their vision of one thing that they would like to change in the wealth management industry. So the floor is all yours. So
yeah, I am appreciative that we are shifting more towards digital, and digital becomes more important in the private banking business, because I do think it's of benefits and the need not just for clients, but also it creates benefits for the front office and the bank as a whole, in terms of both in terms of efficiency gains, but also risk mitigation. Because ultimately, an interaction done via digital is typically a safer interaction than the interaction done via traditional channels.
Absolutely. So, continuing on your great streak of answers, so you would like to have more digital transformation of the industry. That is great. Thank you so much for joining us this afternoon. This has been an absolute pleasure, and thank you for sharing your insights.
Thank you very much, Laks, for having me. It was a pleasure.
Thank you.